So what happens if you can't make your loan repayments? Does the bank come in right away and take your house? What logistically can you do to make sure that you can keep the house even if your circumstances have changed so that you're unable to make the agreed upon repayments? So this does happen from time to time. Generally it happens when circumstances have changed. I think I've had it happen 3 or 4 times since I'm doing this. One person lost their job, one person had a death in the family and took time off work, and one person started a new role that paid significantly less despite the promise to pay more. And that change in income in all of these circumstances led them to be unable to make the repayments on these loans without putting themselves into financial difficulty. So what do these people do? They reach out to the hardship department in the bank. Now, all major banks have these, and it's effectively a department that works with you to try and figure out how to allow you to get through this period of reduced income so that you can keep the house and the bank stays happy. Logistically, what it looks like is usually 1 or 2 things. They'll potentially reduce the repayments to interest only or even lower for a period of time, just to allow you a little bit of extra breathing room. So if you've still got a decent amount of money coming in, but things are a bit tight, they might reduce those repayments to just give your cash flow a little bit of a break. That might be for a period of 3 to 6 months. And then once you're back on your feet, your income's returned to normal, you can then make your payments resume as normal. They also can temporarily pause the repayments, and you will be accruing interest in this time, so you don't get money for free. But it means that from a cash flow point of view, you've got, again, additional breathing room. And so there are a lot of ways that the bank can work with you to make sure that if you do have a temporary reduction in income, you don't have to lose the house right away, or if you are going to have to sell it, you don't have to fire sale it, and you've got time to take the appropriate actions. So what's the downside of this? Effectively, you go into hardship. This appears on your credit file, and it can make it quite difficult to get lending within a 6-month period of this. It's not impossible, but it does make it more challenging. And so something when we speak with our clients who are considering this, is just make sure they don't have any plans for needing money in the next 6 months. And if they do have plans, we make sure we get some backup plans or solutions in place. But it can be a great solution for clients who've got a temporary reduction in income, don't want to lose the house, don't want to sell the house, and need help getting through it. A lot of times the banks will work with you, put you in hardship, reduce your repayments temporarily, and give you time to get back on your feet.